Hello everyone, welcome to today's video. Hope you are doing good. So today we're going to analyze top performing stocks in last 1 year using point and trigger charts. This is the chart of Nifty 50 in monthly, as you can see. So this is in weekly and this is in daily. So if you want to know in last 1 year how much return has Nifty given us, so we can see here that I've already marked here. So this is from July end to now, the return is around 10%. In fact, till mid-June, the return was in fact negative. See, it would have been here. So after that, recently Nifty had a run of around more than 10% from the bottom. So currently the return is 10%. So, but if you want extra return more than the market is providing, you have to do some extra effort also, develop some new skills. And today I will show you how you can invest and outperform the market. So I have found this list from screener.in. As you can see, here I have used this query to find out which large cap stocks are providing highest returns. So I have considered 20,000 crore as the market cap for considering the large cap stocks. So you can see that the stocks list here and the returns, kind of returns which are given. Top stocks are from Adani Group, which is given more than 200% returns. And there are other stocks as well. And this is the same screener using from the mid cap space. So I've considered market cap range of 5,000 to 2,000 crore to find the mid cap stocks which have given the highest returns. And as I said, I only consider stocks which are in NSE, listed on NSE. So EK Energy will not qualify in that. BLS, Shopper Stop. So Shopper Stop, GMDC, the kind of return they provided, you can see here, 137%, 175%, 129, 120. These kind of returns you would have got in last 1 year if you had invested in these stocks. In fact, these are some of the stocks which we have already traded and booked profits. Tata Elxsi and Linda India, in fact, we are still holding them. Adani Transmission also, we are still holding. From mid-cap space, we have recently traded BLS, Shopper Stop, we have already traded. Raymond also at one time we had bought. We are also having VDL, VRL log. We had traded Electra also at some point of time. So now I will take you through the charts of these stocks to understand how you could have used, how you could have invested in these stocks using simple methods. So this is the chart of ATGL with a 3 box size and a 3 reversal size. So I will talk about 3 patterns which will mostly use in our analysis to find stocks to invest. First one is a low pole. So this is marked here in this chart. This is also a low pole LP. Then we will also talk about mini bottoms. Like this is a mini bottom, and this is not a low pole. And I will talk about another type of pattern, which again will have an anchor column, which is coming out from a range. So 3 types of patterns I will talk about trading. So ATGL, I have actually traded at this point. We entered here, and it would have sold here. So the criteria was the anchor column with a low pole or mini bottom, which is satisfied over here. Once the anchor column is forming, you have to wait for a correction, which happened over here, and with a suitable risk profile, you can enter upon breakout. So that is what happened over here. And if you notice the prices, this was here, it was around 170, and when it given the sell signal, the price was around 1100. So around more than 5 times returns it is given. And even after that, it had formed an anchor column with a low pole and mini bottom. So it would have again considered, we would have again considered buying above this double top buy over here, but it gave a sell signal below there. And so these kind of things keep on happening. You cannot get the entire return from here to here unless you hold it. but if you can ride some of the swings here, you can make good returns. This is the chart of Adani Power in 3 by 3 size, 3 by 3 box size. So just observe, if I increase the box size to 5, the noise will come down here. So that is the advantage of using higher box sizes. But again, we have to strike a balance so that we can get enough number of trades and we can enter at the right point. So here we will try to find anchor columns which are coming out from bottom. And as I mentioned, the three criteria, it has to satisfy those. So one of those criteria is anchor column with a low pole, or second criteria is anchor column with a mini bottom, or third is anchor column which is coming out of a range. So if, in this case, this anchor column is coming out of this range bound movement and from the bottom. So we will try to find the anchor columns from the corners, from the bottoms, or from any kind of corner. So this anchor column would have satisfied our criteria, and the double top buy over here we could have entered. So again, this is also an anchor column, but we will not consider the follow through buy over here. So that is the advantage of using this is specific anchor columns, because they're high probability, and the backtesting gives high probability of success. You can see there is another anchor column which formed over here also, but it never gave a follow through buy signal. In fact, it gave a sell signal over here. This anchor column, which is formed recently, again has come out of a, the mini bottom was near, but exactly this anchor column is not the mini bottom, and it is coming out of a range bound movement here. So we will again consider this anchor column, and this anchor column is again having a good volume as well, if you can see over here. So volumes also gives a confirmation. But even if you had entered here, we would have been stopped out again at the same price. But if you can see that the stock is moving up only. If you observe the chart over here, so this anchor column is coming out of a mini bottom, and it is from actually this bottom over here. So the follow through buy could have been considered for buying, and if you can see that the sell signal never came before this point. So we could have entered, one could have entered this stock around price of 280, and he would have stopped out at 1356. Again, tremendous multi-fold return one could have generated. And again, actually, I have traded this stock at this double top buy over here, because this anchor column is coming out of a mini bottom. As I mentioned, I will try to find stocks which are coming from corners, forming anchor columns. So right now it is around 34.92. The next stock is TTML. So this is the chart in 3% box size. As you can see, there is large whipsaws in this stock. So in 3% box size, what are the entry points we were getting? So when this stock is in a downtrend, we are seeing that this anchor column is being formed. And when some stock is in downtrend, we will not consider for buying that stock. So even after this anchor column was formed, we will avoid the stock. And even after this anchor column is formed, we will ignore, because it is not fitting our criteria of any of the three cases that I mentioned. But after this anchor column is coming out of a mini bottom, and the downtrend, there is no resistance ahead in the chart. So after forming this anchor column, we would consider this for buying. And once this double top buy is given here, we could have entered, and the sell signal would have generated here. But even better, if you had hold this stock for a longer time, you could have gotten more return. But as I said, you cannot get the whole return of the journey unless you hold it and forget. That is that is a different kind of a game altogether. But that entails higher risk as well if the market doesn't go on your expected side. If you see this anchor column was also coming out of this corner here. Although this is not exactly mini bottom, but mini bottom was here. So we can consider this anchor column, and this is the double top buy it has given. But if you wanted to avoid this downtrending line, you could have avoided and waited and entered here. So the target could have been around 230, which was met actually. And the next sell signal came over here. The next stock is CG Power. The first anchor column was formed here from the bottom. But as I said, there are so many resistance line. We would like to avoid that stuff at that point of time. So the next anchor column was formed here. Again, that was formed from the bottom with a mini bottom and a low pole. So we could have considered, but again, as I said, we want to avoid it till it reaches this point here. So the follow through anchor column would also be avoided. And the first time we consider the stock for buying would be here, this anchor column, because as you can see, this there is a mini bottom formed over here. So that is the criteria for one of the criteria for entering into a stock. So the double top buy over here would have been a buy for us. And as you can see, that there is no sell signal that is generated till now. So once we had entered at around 39, we have the price at 230 right now. So the next stock is Tata LXI. From 2015, it was moving in a consolidating in a sideways movement, and when it broke out after COVID, it was an anchor column with a low pole and mini bottom. So it satisfies the criteria. So the entry point would be here, the double top buy over here with a small stop loss, and this stock has not given a sell signal so far. This is actually in the model portfolio. It's a model portfolio stock, and the return is more than 5x right now. The next stock is Lende India. So again, this stock is was consolidating from 2018, and it finally broke out over here. But considering the system which I'm discussing right now, you won't get an entry point. Uh, say if you had been considering this anchor column in 2018, the bicycle never came over here, so you won't don't have to bother about that. Even this anchor column was formed, and there was no double to buy follow through here, so we can avoid it. And finally, the anchor column came here at this point, and it came from again this range was forming over here. So the third criteria which I discussed, apart from low pole and mini bottom, this is the third criteria, which is any anchor column which is coming out of a significant move. So this anchor column is coming out of this range bound movement after a long time. So you can consider this anchor column, and the follow through buy was considered. So you could have entered this position, but you would have been stopped out over here. But again, it is giving a brought up buy over here. You could have entered, and it is continuing to give good returns. Now we come to the mid cap stocks. We apply the same chart patterns over there as well, and using that we will see how we would have invested simply. The advantage of using anchor columns, this point and figure charting system is that the buy and sell signals are unambiguous, and we can just hold on to this chart if it does not give out sell signal. Many people don't have that patience to hold on to a winning stock. So let us come back to the analysis here. So you can see that from the bottom this anchor column was formed, but I would not consider this because the trend was down and there were resistance lines ahead. So and this anchor column is not satisfying any of our criteria, so this is anyway negated. So the first anchor column which is satisfying our criteria is over here, which we could have traded, and this double top buy would have been a entry point, and here we would have exit. If we observe this chart in if we observe this chart in 5% box size, we can see that the noise is filtered, and we could have entered over here itself, this double top buy over here, because the resistance line was almost covered over here, and this anchor column is also a mini bottom coming from a mini bottom. So you could have entered over here, and in 5% box size, the sell signal is still not generated. So that is the advantage of using higher box size. The next stock is shopper stock. So the first anchor column from the bottom you can see here, but it is not a low pole, not a mini bottom, so we'll avoid this. The next anchor column is forming over here, and as you can see that it is not an anchor column with a low pole or mini bottom, but just the previous green column was a mini bottom. This is again coming out of a range bound movement. So this is the third criteria which I discussed. So this entry point would have been a buy for us. Still considered this entry point as a buy as well, because this anchor column is also coming from a mini bottom. The next stock is GMDC. So GMDC, the first anchor column came over here, and had a good volume. In the nearby columns, it had the highest volume and in this column. And you can see that this anchor column is coming out of this long range movement. So this would have been a criteria for entry for us at this point, and we could have exited this point. The next stock is Raymond, and as you can see, the first anchor column from the after the bottom has been found was found at here. But you would say that this is not a mini bottom and this is not also a low pole. So in that case, the third criteria, which is the coming out of a range bound movement, since it was breaking the overhead resistance lines also, and kind of a range we can say it was coming out of it. You could have considered buying over here. You would have stopped out here. Again, it would have given a buying opportunity over here, and after that, it has not given any sell signal. This is the chart of BCG over here. Although it has corrected a lot from the top, let us see how we could have made some profit over here. As you can see that this stock has been at this range for a long time and finally broke out over here. This anchor column is coming out of a mini bottom and you could have entered over here itself. So from around 24 level, you could have sold it around 100, around 100. Yeah, 4 times return you could have met. The next stock is LP equipment. From the bottom, this anchor column was formed, which is not mini bottom or low pole, so we'd avoid it. But when this anchor column was formed, this was a mini bottom. The follow through buy would have entered, and we would be holding it till here. So decent amount of return we could have generated around 170 level to 300, more than 300, so almost double. Even after that, right now the anchor column which you can see here is coming from a corner with a mini bottom. So the follow through buy you could have been considered for buying. So next up is Electra. Would have given a buy signal over here because this anchor column is coming out of mini bottom, and this anchor column we would consider because this is not a mini bottom, not a low pole. So this buying opportunity, first buying opportunity is there. If you can see that the sell signal was not given until this point. So imagine the kind of return you could have made. So almost like 6-7 times of return you could have gotten. So that is a strategy one can use simply by observing these stocks, or you can use the scanner feature to scan this kind of patterns. There are point and figure scanners here. So using the scanner feature, you can make your own scanner and find those stocks in maybe weekly or monthly basis and invest on in those particular patterns that I discussed. So this is if you want more return than Nifty. Let's say if you want more than 10% return, you would have to do something extra. If you want to observe the kind of calls that we are getting using this kind of system, you can simply follow this link. I have shared this link in the YouTube description, so you can just mark that link in your browser and just observe the calls weekly. I update this sheet weekly, and if you can just message me on Twitter, I can add to your broadcast where you can get updates as well. That's it from this video, guys. If you found this content useful, please like the video and share with your friends as well. Thank you.